AUDUSD, since we already looked at the dollar index. Okay, so AUDUSD. Okay, so similar to the dollar index, it was showing that AUDUSD looked like it was ready to go bearish, but the price action showed us something different. So because we had a breakout here, the market pushed up. This would have been like a 61.8 retracement or so, and then it found resistance. So after this strong shooting star, bearish engulfing candle, we would have liked for the market to just continue to drop. But because that didn't happen, that showed us that there's something going on within the market and that this bearish move may not happen. And because we had this candle, the very next candles pushed the market right back up, and all it did was make a brand new high. All right, so even with this, we would still be within like a descending channel because you could draw a trend line like this. All right, but for me, because this price action right here was taken out, now I got to kind of just look at it a little bit different. So now if I draw a trend line from the bottom part, instead of looking at the market coming from the top down, now let me look at it from this bottom part going up. And I'm going to start my trend line from this point, and I'm going to connect it to this point, and then it just extend it out to the future. Like that. All right. So now if I were to, let's say I were to draw a fib from this low up to this high now. So now fib from this low up to this high, price pushback, 61.8 retracement, also hits the 50 EMA and also gives us a third trend line hit, our second trend line hit. So now I'm waiting to see if the market holds at this support. If the market holds at this support, then more than likely you're going to get a push back up to the upside. And you'll see the market more than likely hit the negative 24 if we hold at this level, because just keep in mind that the market could easily just break below this support level. But I feel like because of where the market is at right now, regardless of what's happens, you just need to be patient and wait for the confirmation of where market is trying to go. So if you get that break to the downside and that push back up to the upside for the retracement, then I know more than likely I'm going to touch my sell and write it down to the downside. And it's the same thing for the bullish movement. If the price can't break back below this support, then more than likely you're going to get another attempt to the upside. Hold on. Evening star on what pattern? I mean, on what pair? AUDUSD. I don't know where I don't know if you're calling this right here the evening star, or this, and this. I would just say be careful with that, because you got to understand that this was the gap of the week and the market started right here. So a lot of times they like to fake out and print false patterns to get you to go the opposite way, when in reality the whole trend may be bullish. Because, and don't get me wrong, it may be an evening star pattern, and that's why I need to be a little bit more patient. But just look at this, the fact that there are more bullish candles than bearish candles in this whole move. So you see, like, bullish trend pushed up, short bearish trend. Bullish trend pushes up, short bearish trend. So like I said, if this can't break, then I'm not really looking at this as the evening star pattern. I'm looking at this more so as a higher high, higher low, 61.8 fib retracement, second trend line rejection, and then I'll just look to ride that up to the upside. Now, if the price pushed up here, we could get a reversal up at this level too. So that's why I'm saying this is still like a critical level, because overall, if you just look at the previous high on this period, it comes in around here. So until the highs are broken, then the overall structure has not fully changed, because overall the most recent the most recent lower high is still valid. So unless the market were to break above this and clear above this, then we would know that the overall bias of this market has changed to bullish. As of right now, you can still make money catching buys or sells, but the overall market isn't showing you like a great confirmation of where the market is trying to go. And that's why I'm saying I would rather intraday trade opposed to trying to hold trades and hold them for weeks. Yeah. So yeah, just keep in mind of that, because for me, even when I see certain things, I don't like to hold it. Just like how if you just looked in the past, like this move right here, it would have showed, a shooting star right here. This would have been a shooting star and a bearish engulfing candle. So if you would have sold just because you seen that, you would have ended up losing profits. And that's why right here, just because it looks like an evening star, I'm not going to sell it, because the overall structure is still more so bullish. I would need for the market to break below the trend line and retest and hold below the trend line. Then I would catch a clean sell, because I would know overall that the market is coming back down to at least this support right here. And if that gets broken, then I know it's coming back down to this support. So that's why you kind of want to be patient. And for me, a lot of times I used to think that if I didn't hop in right then and there, that I was going to miss the trade. And then I started realizing that more than likely, the market is going to pull back into an area where you can still get in on the trade at. And if you rush it, you may not, like if you, for example, if I rush a sell right here, the market could push up another 50 to 100 pips. And if you're not using proper risk management, you're not going to be able to withstand that 50 to 100 pip retracement. And then overall, the market just drops and goes in the way that you were expecting it to anyway. So for me, I need to still have my profits. I need to still have skin in the game before the market does any type of retracement or any type of like foolery, because more than likely that's going to happen. It's never like, even if I think the market's going to sell right here, I still need to think that, okay, if the market comes up here, I still need to be good. Like I can't think if the market comes up here, then I lose all my money. And I can't withstand that. I need to understand that I can sell here, but if the market pushes up here and I sold, then yeah, I can still get in on this trade. But that was just an example. But in this case, I'm more so bullish on AUDUSD unless we get a break back below the support. Hold on, somebody's trying to inch. Oh, then they left. I don't know why it's on that. It should just be an inch. I gotta change that after. All right, that's AUDUSD. So I'm gonna go over a couple more USD pairs real quick. EURUSD. It's kind of on the same thing. So even on this pair, it kind of shows that the evening star type of structure. But from what I'm seeing the market, it pushed down here, and then it slowly has been climbing back above the 50 EMA. All right here, it pushed back down, retraced, but failed to close below, pushed back up. And right now, currently, we're back retesting that 50 EMA. So for me, I need to see either the market is going to push up, and if it can't break above 118, we may get another drop back down to the downside. But because of what I'm looking at with the dollar and AU and stuff like that, I would like to see, even if the market pushes down, I would like to see overall this support hold down here. And I would like to see the market push back up to the upside if we can get another attempt to this blue supply zone. And that's only if we could get a break and hold above 118, and we also can hold above this resistance right here. So right here, if we could push up above that, something like this, and even if it pushes back down like this and holds, then I would know that more than likely we're going to get an attempt back up into this level right here. All right, but if we cannot break above 118, then I'm not going to look for buys, and then I won't look for sales until we break back below, retest like that, and then hold. So right here, this is a great confirmation sell for me. If we pushes up, we can't really break above 118. We get that drop, and then we get a retracement, and on that retracement, it holds at resistance. Then right there, that would be a high confirmation sell for me down to the downside. All right. All right, GBPUSD. Similarly, it was moving in this descending wedge right here, or this descending channel, and then we finally got a breakout. We got the breakout right here. The market pushed up, and then it gave us a retest right here. So right here was the retest of the breakout. And then after the retest, it held at support. So this diagonal channel right here is now acting as support. When price was pushing up right here, it was acting as resistance. We got the breakthrough. So on the way back down, it's now acting as support. It held at support. The market did not break below the support. And then boom, what did we get? A rise up over 100 pips probably. So just by seeing something as simple as that, you would have been able to catch over 200 pips. And then just like that, what did the market do? It pushed back down and retested the 50 EMA right here. Found support, boom, and then the market pushed right back up. So now right here, I would need the market to break above this resistance because right now we're trapped between this resistance and this support. So really, I just need a breakout of either two sides. If we get the breakout of the upside, boom, catch your buys here or either buys here, and then look to ride it to the upside. If we get a break to the downside, it's the same thing but opposite. Look for the retracement out, boom. Wait for the retracement here. If it holds, and then it's taking it back down to the downside. And always look to the left in order to find where your target should end at. Just like how my first target would end around here because we have a key support here and we have a lot of structure within this level right here. So if we break below that level, then I know the next level of getting hit would be coming down here. If we were to break below this support level. But overall, the market is more so looking bullish. All right. If there's any specific pairs that you kind of want me to go over, you could just post it in the chat. I have a few more dollar pairs that I wanted to cover. USDCHF was another one that I was talking about. Okay, yeah, so USDCHF looks more so like the dollar index where it looked like we had a strong support, inverted kind of, and then we got a strong breakout right here. So after this breakout, if the market would have pushed down here and just held that support, then we would have knew that the market is going to make another attempt to the upside. But because we could not get that hold at support and the market kept slowly breaking back lower, candlesticks are getting smaller, it starts to break below the 50 EMA, starts to break back below support. Now we know that this overall breakout, retest to continuation move is no longer valid. So now we're looking at this as the market made a retracement up, push down. This would have been the retracement. If the market cannot break above 0.92, then we overall know that this market is trying to go back bearish, and eventually we'll head back down to either this support or the support back down here. So that's how this is looking more so right now, unless we break back above the 0.92. That would be the only confirmation to where the bullish bias may come back valid. Without that, I'm not looking for buys on this pair just yet. I'll be more so looking for the sells because the price action, even if you look, like the market right here, it broke below the 50 EMA, came back up, retested it right here. Right after that, bearish engulfing candle. Pushed the market. This one candle engulfed the previous like 6 candles to the left. Push the market down. The market tries to push back up, fails to break back above previous resistance. So if we fail to break above previous resistance, then overall we know we're still in this overall bearish move. All right. Let me see. Okay. I was going to get to I haven't looked at EA, but I was going to get to AJ. Gold. I don't really trade NASDAQ, but gold, I'm not gonna lie. I thought gold was looking pretty bearish earlier, but now when I look at it, it looks bullish just like the other dollar pairs. So it was looking bearish. Let me delete this because it's getting in my way. Okay, yeah, so right here, when the market was up here, I thought it was going to be bearish because we pushed up, hit this level right here, also aligned with this level to the left right here. Let me go rectangle. I don't like that. Okay, yeah, so it looked like it was a breakout retest, and then the market was going to drop. So that still can happen. It's just the market, it pushed all the way down to this level, and it failed to break below this low. So the structure did not break for the overall bears, and that tells me that the bullish bias is still valid, because if the market needed to drop, this low right here should have been broken. It should have been taken out. But because that didn't happen, we still have another opportunity to possibly break back towards 1940, 1950 resistance, if not higher. So you can also draw a trend line from the bottom point here, connect it out to the future like that. You see rejection, rejection here. So with this, if we cannot break back below this trend line, and more importantly below this support, then more than likely the bias is going to show us that the gold is possibly going to push back up and make another attempt to the upside. But now if we break back below this support, then I would need that retest. If we break below the support on this retest, I'll be looking for my sales heavily, and then I'll look to ride it back down to the downside. That's the only way that I'll be looking for sales, really, if we get something like this. But really, I would want this to get broken, this support to get broken. Like that, something like that. That'll be the only way I'll be looking for sales on gold. If not, then overall, I'm looking at this like higher high, higher low, higher high, higher low, second trend line hit. If I draw a fib, I could draw it from this low up to this high. That'll probably be like a 61.8 retracement. Let me see. So yeah, if I grab my fib, I can draw one from possibly this low up to the high. Price pushed down 78.6 retracement. So yeah, if price cannot break below this 1874 level, then overall I like to see the market push up and reach possibly 1950. All right. What else? I don't really trade the NZDAQ like that. AUDUSD. Yeah, that was another pair. Okay, so AUDUSD and EURJPY are both at that weird level where it's possibly at a higher low, but I wouldn't be surprised if it wanted to drop more. But in this case, my overall bias is looking at it like it wants to go up higher. I just think it may not be ready yet. It may want to drop a little bit lower before overall going up. All right, with this trend line, I don't really like this trend line too much. It looks too steep. So if you were to draw this trend line, it could get broken and price could still go to the upside. So that's why I don't really, it could be used as like a fake out. All right, so for me, we have a critical higher low support region that came in around 75 to 748.8. So as long as the market can hold above this level, then overall, I can see the market still going bullish. The market for me needs to take out this bullish price action. So just like how on a previous pair, if you just discontinue the moves that happen to the left and just look at it from this perspective, we have bullish candles that push the market up strong, and then we got consolidation. One bearish candle, and then we have three more bullish candles that push the market up and made a higher high. So now we have those slight bearish candles, and if we cannot break below this point down here, then more than likely we may see another attempt to the upside. Because if you just look, the bullish moves are outweighing the bearish moves by a lot. So 4 days of bullish price action, consolidation. 3 days of bullish price action, then you had the 3 days of, or 2.5 days of bearish price action. So now we're getting towards that area to where if the market cannot break back below, then more than likely we're going to either see some type of stall, a bullish engulfing, or some type of bullish candlestick pattern, and then that'll give you more confirmation that overall the market is trying to push back to the upside. But now, if we get that break to where, let's say the market just continues to drop straight down, and even let's say it doesn't break the support, let's say it just does that and then pushes up, I would, at this level right here, I would need some type of strong bullish move. So I would need a strong bullish engulfing candle. I would need a retracement of that candle, and I would just need multiple candlesticks to show me that this level is trying to hold, more importantly. If I get that, then I know that overall the market is trying to go up. But in this case right now, it's still a little bit too early because the market still could potentially drop back a little bit lower before it gives us the next opportunity of what it's trying to do. But overall, yeah, I'm more so looking at the buys. I just need to wait for the market to show me a little bit more confirmation on the daily. So the daily doesn't look great, but the 4 hour, let me see what that looks like. Keep it going slow. Okay, yeah, on the 4 hour, price push down to this level is just, you have all this right here. So really, I just need to see what the market is trying to do, because easily it could be a bearish engulfing through, up, down. So I just want to see how the market reacts around this level. Like I said, if these next few candles cannot break below support, then more than likely we may see some type of rejection. Okay, USDCAD. Okay, multiple questions. So for the currency indexes, I use for AUD, I use AXY. For JPY, I use JPN 225. I'll go over it real quick. All right, USDCAD though. Let me just look at this on a daily time frame. Yeah. So I meant to go over this. So yeah, USDCAD is bearish right now. It may be ready for a bullish retracement, but that bullish retracement is going to lead it to the overall bearish play overall from what it looks like. So just looking at this, so the market, when it pushed up to this high right here, you can clearly see that it made like tweezer tops, and it was not trying to break back above this resistance right here. So that right there was already a start of, okay, we may get some type of bearish move. All right, from there, the market pushed down, held on the 50 EMA, and then we finally got a bearish engulfing candle to push price below the overall trend line and also break below the 50 EMA. So when that happened, the market dropped another 2 days, and then it ended up breaking below the previous support. So that right there is our first sign of the overall structure changing, is that the market broke below the 50 EMA, broke below the trend line, and also took out the most recent low, most recent support. So with all that, now because we had a strong drop, I wouldn't be surprised if we see some type of move to the upside for that retracement. And keep in mind, we have a level here, we have levels here, and we have a level here. So if you were to draw a line and try to find a median area of that, that could be a possible retracement. Just like how I have here, 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 line broke through here. I also got one here, came here, came here. So that's why that line right there could be relevant, because on a retracement, the market in the past like to hit this area multiple times. So because we finally got that breakthrough, this could be a possible level where the market retraces to. And if the market were to retrace to this level and fail to break above this level, then more than likely we know that the market just pushed up, made a new lower high, and then we will look to sell at these levels if the market is showing us it's not trying to break back above resistance. And then we would take it back down to our first take profit here, and then our second take profit down here. But because the overall market is bearish, if you're new, you can't just look and take that buy, because now you're trading against the trend. So for me, excuse me, a lot of times I would wait for this move to happen, wait for the actual confirmation to happen, and then I would just wait for the overall trend to play out, because I don't need to try to catch this buy if the overall market is bearish, because I might, the overall retracement may not go as high as you want it to go. And that's the problem. So if you catch these type of moves, you need to know what's enough. You can't, like want to catch a counter trend trade and look to hold it all the way up to a certain level, because you're trading against the overall market, the overall momentum of the market. So, for example, you may think, okay, this up here, this 1.325 level is a great level to have it, but in reality, like, because the market is so bearish, it may only push up towards like 1.32. So you got it going up another 50 pips. In reality, the market is only trying to push up to 1.32. Now, you're not taking your profits because you wanted to go up higher, and in reality, it pushes up, and now it's just coming back down. So because you didn't take profits because you think it's coming up here, in reality, you should have already moved your stop loss to break even because you're trading against the trend anyway. And that's what I like to teach people. It's not more so about, you know, catching the actual patterns and stuff like that, because that's easy. It's more so just about the structure and being disciplined and strategic on how to not lose money. Like, that's what I like to teach people, because, man, it's so easy to just trade. You could be up $500 and people still lose money because they don't know how to just monitor or, like, be disciplined or monitor their stop losses or whatever. It's just like, in these markets, you just got to take what the market gives you at the end of the day, man. Take what they give you. Yep, no doubt, man. I'll tap in with you, Blaine. All right, so what other pair do I have? NZDUSD and then the overall indexes. So NZDUSD right now. Yeah, so it also, I gotta delete this. This was old. So yeah, the price action even on this is looking more so bullish. So same thing as the previous pairs. Like, okay, you had your double top here, a perfect double top. The market dropped. It broke below the neckline. So ideally, if on this retracement right here, if the market held at resistance around this level, we would have got another drop to the downside. But because that did not happen, that shows us that the overall market was trying to go bullish, because the market, it pushed up high and then it dropped. So when it dropped, it did not make a new lower low. All it did was make a new higher low. And then from there, we have a morning star pattern. And then we got a bullish engulfing that pushed price up, and then it made a brand new high. And also pushed price back above the neckline. So now we're either going to get a continuation to upside, or we're going to see the market steadily drop back down, maybe, hold, and then we'll get that move to the upside. But overall, as of right now, I'm going to still be bullish on this pair unless you see something like this where the market were to break below that, push back up and hold at resistance. If it pushes below, and then when it pushes back up, if it cannot break back above, then more than likely you're going to see another drop to the downside. And that's the only way that I'll be looking for sales if something like that happens. But overall, yeah, this low right here would need to get broken for the bearish bias. All right, yeah, so NZDUSD is looking more bullish. I would just wait for a possible retracement in order to buy it. Ideally, I would have loved to catch my buys right here, because then you could have just put your stop loss down here. It would have been an easy trade. Now that you're in profit, you just move your stop loss from here and then move that in profit to here. So if you entered here, you moved your stop loss initially was down here, and then you moved it once you were in profit up here. So now, even if the market comes back down against you, like, you either go break even or you close in a little bit of profit. But you're holding a winner to where the structure looks like it could potentially go up even higher. So that way you have some type of discipline on how you're trying to trade. You know what I mean? Like, you understand that on your winners, you're going to always modify your stop loss and try to hold it to a certain level. And if it's a loser, you know to get out of that a lot quicker, because it's all about, I mean, it's just a numbers game at the end of the day. Like, you can't win every single trade, but if you're trading trades with 2-to-1, 3-to-1 risk reward ratios, then you don't have to be an 80%, 70% trader. You could be a 40% trader and still be profitable, because now you're looking at opportunities where you're gaining 3 and you're only risking 1. So, for example, you're gaining 90 and you're only risking 30. You're gaining 50 and only risking 20 or whatever. So you just want to look at more opportunities like that, and then when you lose, it shouldn't really bother you if you're trading with proper risk management. And that's why I like to tell people it's just a numbers game. The losses are going to come, but if you find the setups where you're trading 3-to-1, 4-to-1, 5-to-1, stuff like that, then, you know, you could be a 30, 20% trader and still be profitable. I'm not saying I want you guys to do. I'm just saying, you know, it's not, you don't have to win every single trade to be profitable if you trade with the proper risk reward tool. All right. There's another pair. What was? Okay, yeah. So the indices. So just like how I go to DXY for the overall dollar index, and that shows me the overall. Like if I DXY, it's showing me US dollar index. So for the majority of the other pairs, it's just going to be the first letter with the AXY. So if I'm looking for Australian dollar index, I would just type in AXY. Boom, Australian dollar index, and this is going to show me the overall odd. But on these type of indices, you like if you look at it on the daily or the smaller time frame, there's going to be a lot of gaps. So you're going to have to come down to like the weekly, and then that's the only way you can kind of see it a little bit clearer for this specific currency. There's probably other Australian indices, currency indexes, but this is the one that I like to use. All right, for that, and then for Japan, they have multiple different ones. For me, I use JPN 225. I don't know why it's not popping up. All right, so I'm gonna just look at JXY on this one. I don't really for the Japanese yen. This is the only one I don't go to JXY all the time. I used to look at JPN 225. I don't know why it's not coming up right now, but JXY is still the currency index. So for the most part, if the Japanese currency index is going up in strength, then more than likely you're going to be selling EJ, AJ, GJ, stuff like that. Because if the currency index is going up in value, that means the overall JPY is going up in value. So if you're trading EURJPY, you would sell that pair because you would be selling the euro, and that would mean you're buying the JPY, and that would be valid for if you were to see this move go up. And then it would be the opposite for it going down. But just keep in mind, just because a currency index is going up or down doesn't mean that you could buy or sell any given pair. You still have to go to the actual pair that you want to trade and do the technicals, do the actual homework to see that if that market is actually ready to go. Because you're going to learn a lot of times you'll go to the dollar index and you'll see like a euro USD and a gold going one way, and then GU or something will be going a totally the opposite way. So it's not that easy to where you could just check and see. I just like to monitor it because I use it as somewhat of a cheat sheet. I don't use it as my overall, but I just like to use it to help me. Since gold is not a currency pair, what index do you look at? The DXY. Yeah, because gold is still traded with the dollar. So um, for the most part, I mean, unless you traded like gold versus euro and stuff like that, but gold USD is like the best market for gold. Yeah, so you would just trade the DXY for that, and stuff like that for it's the same thing. Like when you see the dollar index weak, it means gold is going up for the most part. Not you can't, like I said, you can't just base your whole analysis off of that, but ideally that's what should be going on. If the overall dollar index is strong, that means the gold should be going down. So just like this, how I said the dollar index is weak, when you go to gold, you can clearly see that gold hit a certain level, push down, and then now it's looking like it could potentially go bullish. And I'm pretty sure if the market were to continue to go bearish, then the whole overall dollar index will probably show that it's pushing up in value. Yeah, it's just inverse pairs, and like I said, you can't just base your whole analysis off of those things. But yeah, that's pretty much how it goes. And some pairs move like EU and gold kind of move more similar than like other USD pairs. So EU and gold move more similar than like a GU and a USDCAD and stuff like that. Just like how USDCAD and oil move more similar because they're inverse pairs. Like for America, we like to trade our oil and get our oil from Canada. That's like one of our major players to get our oil from. So USDCAD and oil are inverse pairs. When you see USDCAD going one way, oil is probably going the opposite way. All right. Let me see. EUROJPY. There's some few pairs I still haven't went over. Okay, yeah, EURJPY, it pushed up to this level and it started dropping. For this pair, I need to see if this support down here holds. Yeah, I need to see if this support holds. The market could still go bullish if this holds down here because this will still be within structure. I would like for it to hold above 123 though. But like I said, if we break below this level, then more than likely this is going to go back bearish looking at it on a weekly. So yeah, if this does break below that 123, then overall this 122 level looks like it could get hit down right here. All right, but if this level holds, then I would just look at this as a higher low, and I would draw my fib from this low up to this high like that. And then I would treat this like a 72 to 78.6 retracement. If we get that hold, it's too early to tell right now. This is why I'm just drawing this fib to show an example. I'm going to delete it right after because it's too early to say this is going to be a 72 or a 78.6 retracement. But if we were to get something like that and multiple candlesticks start closing and it starts closing up higher, then more than likely we may get that push back up to the upside. But overall, I would need to break back above 124.5 in order for that to happen. Because if we break it back above 124.5, then more than likely the market is coming up to 125, if not the negative 24, which would be 100 pips from 124.5. So then that's why I'm saying, like, you think you might be late on the trade, but not really. And once you start to understand that and train your mind into thinking that, then you'll be good because then you don't have to chase trades. So just like, for example, like if this holds, and let's say it closed was with like a more of a wick, and let's just say the body closes around the 61.8 or whatever. So if we let me see, if the market were to push up from that level right there and break above 124.50, if you wait for this move right here, even though you just missed all of this, if you wait for this move right here and it holds, you can still catch 50 pips here, 100 plus pips here, and it gives you a higher confirmation trade. Because a lot of times you trying to catch all this is going to result into you losing more trades. But now if you just be patient, wait for the move. Okay, I see that it did all this extra stuff. It broke above resistance. So now I just need to see if it's trying to go higher. And you could tell it's trying to go higher on the retracement and if it holds as support. So even if the market were to push back down this low and hold, it could still, move up to the upside. It's just if it pushes down this low, you would need the market to break back above 124.5. And if it doesn't if it retests it, you just need another hold right there, like that. So the lower it pushes, like the lower it were to retrace back down, it would take longer for you to actually get confirmation of the market trying to go to the overall upside. Because for me, that 1.245 needs to get cleared and it needs to hold as support. So once it gets broken above, I need to see a hold as support to where it doesn't break structure. And once we get that, then I know to the upside of 50 to 100 pips to the upside. All right, and if we don't get that sell, then overall, if the market keeps dropping, and let's say it finally breaks below 123, if it retests 123, then overall it's the same thing, 50 to 100 pips down to the downside. 122.50 aligns with this level right here, like that, and then 122 aligns with the overall 50 EMA on the weekly time frame right here. So regardless if it goes to the upside or to the downside, I'm ready to catch 50 to 100 pips. And that's what I be trying to train people to do. Like, it don't matter about having a bias and being right about the bias. It's about being versatile and being able to change your bias at any given time and be able to profit without being able to profit more than you lose on your trades. So that's more so the importance to me. Just understanding that aspect to where I don't care if the market goes up or down. I'm just ready for either scenario. Because I'm not, and a lot of people get emotionally attached to their overall like markups and stuff like that. And it's just like, at the end of the day, just focus on what you can control. And that's waiting for the market to give you an opportunity, and then you just executing on that opportunity. Don't try to force the opportunity. Wait for the market to give it to you. Yep, trade which exactly. And for me, a lot of times I used to try to trade what I expect because I thought, like I knew where the market was going, and then that hindered me because you don't like the market is too big. You know what I mean? Even if I had 100,000, $1 million, that still would be a grain of salt in this market. So I just had to realize that. All right, is there any other pairs? I believe I went over a lot of them right now. What pair is this right here? Okay. Do you guys have any questions or any pairs that you want me to go over? So I had to take a little break of doing webinars and stuff because a lot was going on with the company. But yeah, I'm gonna get back on the flow of doing this at least 2 to 3 times a week. So yeah, more so I like to do things for the actual VIP group, but I'm gonna start posting more in the overall Telegram group also. So keep an eye out for that. All right, yeah. So if you guys don't have any more questions, I'm gonna hop off. Can you check GBPUSD 1 hour? Hold on. I'm gonna have to delete some of this stuff real quick. Okay, yeah. So I'm gonna look at the 1 hour, but just looking at the 4 hour, I see the market gave us and printed a bearish engulfing candle. So on a 1 hour, I would expect it to retrace and then shoot back up. So yeah, right now, because we just had 1, 2, 3, 4, 5, 6, 7 hours of rise after all this slow price action, I wouldn't be surprised if the market pushes down towards like the 50 EMA area around this elite region right here. If it finds support around that region, then more than likely you're going to see another move to the upside. And also, you can also on a smaller time frame, you could also possibly draw a fib from this low to this high, and then that can give you an indication where the market can also go. So the level that I had it coming to is the 38.2, but just keep in mind that the 61.8, and it's like 61.8 is like a level that'll get hit more likely than the 38.2 for like a valid trend. So with something like this, yeah, I would have my fib drawn out on the 1 hour, and I would expect it to push down towards the 38.2. And possibly if it can't hold down there, then this would be the next level I expect it to go to, because you have a good high right here, good support resistance in that area right there. All right, so those are the 2 levels that I would expect it to go to, and then from there possibly bounce. Because on the 4 hour, we already seen that we had a strong bullish engulfing candle. Like this one candle, how many pips is this one candle alone? Like 140 pips, that one candle? Yeah, so a retracement of like 50 to 80 pips could easily happen before we get another attempt to the upside, because GBPUSD moves more volatile than majority of the USD based pairs. All right, yeah. So this is what I'm looking for on a 1 hour. I'm looking for you to make a quick drop and then overall rise to the upside. All right. Is there anything else that you guys want me to go over? Went over. I believe I started recording this late, so I'll post it in the group. I don't know how long we're going so far. What currency index? I already went over a few of them. The dollar index or what currency? Yeah, I already went over JPY and Yeah, I already went over these. They look more so bullish, but we at this high level of resistance. So we pretty much trapped in between these two levels right here, and we're waiting for a breakout. A break to the upside will move odd much higher, and a break to the downside will push odd towards like 69, 68 support level. So this is either going to be moved like this, move to the upside, retracement, and then push to the upside like that, or it's going to be like this, a drop, continuation to the downside like that. One of those two scenarios, you just need to wait for the overall price to show you, because where we're at right now, it looks more so bullish, but we did come to this high where the candlestick started to get smaller. So I would just wait for a little bit more confirmation. Yeah, the currency index is just like a cheat sheet. It doesn't really tell you too much. Like even the odd currency, like Australian currency index right here, like, okay, you can look at this and AUDUSD, AURJPY could be going up, but you could be looking at a pair like AUDUSD or AUDNZD and it could be dropping. You know what I mean? So at the end of the day, this is just a cheat sheet to kind of give you an idea of what the overall currency is doing. But at the end of the day, you still need to go to the actual pair that you want to trade and do your overall technicals and fundamentals and see how the actual price action is looking on the currency pair that you're trying to trade. The indexes are just cheat sheets to help you get an idea of the overall momentum. So in this case, the overall momentum of the Australian dollar has been bullish, but we got to this level where we could see a quick retracement. But overall, yeah, the overall market is bullish on Australian dollar index. And then Japan yen currency index is choppy right now. It looks more so bullish though. But yeah, this is a lot of chop. Do I use Heikenhashi? No, I don't. I use just regular candlesticks. I know some people that use Heikiashi, whatever it's called. That one, and it's another one, Renko's, people be using. But stuff like that, I just feel like it just all depends on what type of trader that you are and what fits you best. All right, so thank you guys for hopping on to this webinar. I'm going to be looking to hop on probably later this week or early next week. If you guys haven't, follow me on Instagram at Winning with Ryan, and take care.